Good morning, traders. It is Monday, November 25th. Taking a look at the charts, we've got the SP 500, and you can see here the market is climbing its way back up. Again, today we're going to see it gap higher about 1/4%. Overall, we've seen the market have this consolidation, had a pop, and then pulled back. And we've been, this will be the first day we're above the 5-day moving average in a couple of trading sessions. We'll see if today can hold. Overall, the type of pattern is a lot like what we saw over here, where we see the price pop, pull back, and it feels as though we're right up here near this top where the market could start to stall out, and we could start to see it pick up speed to the downside. So it's going to be a really critical next couple sessions as we go forward here for the SP 500. If we do see it start to roll over here, we're going to see the safe haven start to put in a bottom and start to rally. Now, if we take a look over at let's take a look over at bonds this morning. Bonds are holding up in this little tight formation, stuck above the 5-day and under the 20 or the 50-day moving average. It's trading right through a little bit of consolidation through here. So we'll see which way bonds start to break. Now they should start to lead the market higher and start to rally as a flight to safe haven. Money starts to rotate in before the stock market potentially rallies, or sorry, stock market starts to fall. Now we have seen a nice strong rally in bonds already, so I think we are seeing money preparing and moving for that, and we'll see if we start to get some follow through. Overall, the stock market is losing momentum, and it's now got more almost mixed signals here on which direction it's going to go. And we're hoping for the market to roll over. That's what we're in position for. And if we take a look over at the VIX is up slightly this morning, but overall it's still flatlining along this low here. This type of level here is where we usually find some type of big spike in the VIX. Hopefully it happens sooner than later. We are long the TVIX, which as the VIX trades sideways, the leveraged ETFs, or really all the ETFs for the VIX, slowly lose value over time. So we're going to be underwater again. The weekend gives us 2 days of the market decay time. We're going to see it gap lower this morning for us. But we are looking for a spike in the VIX this week. Hopefully we'll see it pop back up and get above this 14 and change mark as the market starts to roll over. Now if we look over at gold here, gold, silver down 1/4 or 1/2 to 3/4%. Let's just zoom into gold a bit here. You can see it continuing to sell off, kind of the out of play favor. If we look over at silver, same type of pattern here, and gold miners are much the same as well. They're set to gap lower, but they're still holding these lows going forward. Overall, we're just kind of waiting for the catalyst for some type of news or for the equities market to roll over, and then we're going to see these safe havens pick up speed and really start to take off. But we are seeing the dollar rally today, which could be putting a little bit of pressure on the metals as well to the downside. Now looking over at natural gas, it's down 4.5%. On Friday, I posted a chart showing how we had a cycle high on Friday and how it was pointing to lower prices, and we're really getting pushed, stretched to the limit, testing these recent highs with the cycle high and the 20-day moving average. Today, we are seeing 4.5% pullback and a pretty big move. I don't see it going much further today. It looks like that's a pretty max move for the day. But overall, we are looking for some continued follow-through selling going forward, much like what we've seen in the past, where you get a reversal type bar and then you see continued momentum to the downside. We saw that type of price action over here, where you get a pop up and you get a strong rally, and then you get continued sell-off momentum to the downside. And that's where we are here. We've had the pop, and we had the same over here. We had a pop and then some follow through momentum. Hopefully we'll see some more down, going down here to this 240, 235 area going forward here. We'll see where it ends for the day, but overall this is a nice bearish sign. This should get a lot of traders short selling natural gas and selling out of their position. This is a very bearish candle, engulfing bearish candle, meaning usually we're going to see some more follow through red bars after this. So hopefully we'll end up hitting our first target today, or this week, I mean, and potentially our second target later in the week or next week going forward. Last but not least, taking a look over at crude. Huge volatility last week, big sell-off, huge recovery, and the last couple sessions, little tight recovery or pause here, a little bull flag holding above all these candle highs. Overall, continues to be in this channel here with some pretty wide range movement in price. We continue to just let it do its thing. Overall, I still feel as though it's a bearish formation. There's a lot of noise through here. You can see how it's just oscillating, making lower lows and then higher highs, and it's just all over the place, just constantly moving around. Overall, it is near the upper end of this range, and when it breaks out, what we're looking for ideally is a break to the downside. I think it's got a lot more potential than the upside. Upside, we were talking about hitting 59 to 60 is kind of the upper range. We've got these previous highs right across the chart here. Obviously, these couple days through here, 59, we've got this previous high here, and also more or less this previous high over here. So we're getting close to that upper end of this max kind of range, at which point we could start to see bigger selling and potentially some type of breakdown for a test of this 51 area, somewhere down into this zone here. And if it breaks that, then we're going down to that 45, potentially $40 per barrel mark. So we're going to be looking for a bearish setup eventually. And we're just going to let crude continue to do its thing until we see some type of new setup. Until then, we're not really interested in getting into crude with this volatility, this chop, and huge just shakeouts and moves to the upside and the downside. Overall, if we were to connect these lows here, closing prices, you can see we're really testing these levels to the extreme and then having very strong reversals. If you're a very short-term trader, those are great, but overall, this is really huge volatility for crude, and to me, it feels still very random in terms of where it's going forward here. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.